What's going on YouTube, and welcome back to my channel. So in today's video, we're going to talk about the power of three, also known as accumulation, manipulation, and distribution. Before watching this video, you will need to have a good understanding of market structure, drawn liquidity, and balanced price ranges. The reason for balanced price ranges is because more times than not, the manipulation leg actually does create a BPR. So I'll put the link to those videos in the description. After you're done watching those videos, then come back to where we are. The power of three, also known as AMD, refers to accumulation, which is pretty much a consolidation range, manipulation, which is oftentimes a leg down where we go grab internal sell side liquidity or buy side liquidity, depending on the side of trend, and then the distribution leg, which oftentimes wicks back into a balanced price range and then gets continuation up. One of the main reasons why I love trading AMD setups, honestly, it's the consolidation factor. Consolidation is probably most traders' worst nightmare, and it's only because there is no real trend. The market's just moving sideways. So oftentimes as you're trading consolidation, you see a first PT gets hit, chances are you probably don't take that profits because it's maybe not the greatest profits. And then you'll see your stop loss get hit. And then it'll go back and forth in that range. So therefore, it's best not to trade consolidation and actually wait for the AMD setup to form, as we see here in this example. So as you can see this candle to the right, ultimately this candle to the right is just the higher time frame of the power of three. So what you will notice is the lower time frame will actually form the AMD or power of three setup, and the higher time frame will just show a regular candle. Now, why this is very, very important is because multi-time frame analysis. So when we're watching the trade form on a lower time frame, as we see here, and then the higher time frame starts to act in play. So now at this given point in time, we pretty much have confirmation that we are going to continuously trending higher, or if this was a red candle, trend lower, and seek out the higher time frame drawn liquidity. Now let's dive into a couple live examples. Before you even think to enter a trade, you need to have context of the market. What did it previously do, and what is it likely going to do next? So what can we see here? Notice we have relative equal highs. So let's mark those out. Next, what else can we see? Okay, we have some internal sell side liquidity here. The reason of it being internal sell side liquidity is because if you see this low down here, notice how we would, if we take this low down here, we would basically break market structure on the higher time frame. So based on that alone, this liquidity level that we have down here will only be considered internal sell side liquidity. Now, what else can we see at this internal sell side liquidity? Well, we got a little handy dandy equilibrium block here, don't we? So at this given point in time, this is where I'd actually look to potentially go long to take out those relative equal highs. Let's play this out a bit. Notice we're buyer stepping instantly, right? So as you can see here, this trade setup has a 2.82 risk to reward. Like I always say, anything above a 2-to-1 risk to reward, you take that trade 100% of the time. Now, what else can we also see? Notice how we were consolidating in this range. So this first part would be our accumulation leg. Now, what else can we see? Notice how we keep making higher highs and higher lows. Notice how we created a higher high, got another higher high. Notice how we failed to create a lower low here. So based on that, we understand market structure is still trending up. We are still trying to find and seek higher time frame drawn liquidity. So because we have a good understanding that the market based on the higher time frame is likely going to continuously trending up, we have a good chance that this likely is the accumulation phase going on here. This is likely the manipulation leg, and we get confirmation that it's the manipulation leg once we push back into this range. So let's play this out a bit more. Okay, perfect. So notice how we push back into this range again. Now, let's say you missed this entry. Chances are we can find another entry and just look to seek even higher time frame drawn liquidity now. Let's go look at a lower time frame here. Okay, what can we see? 15-minute equilibrium block, right? Bingo. Another equilibrium block. So based on that, I would actually look to go long in this range. Why would we look to go long in this range? Because this trade, we 100% have confirmation that this is an AMD setup. Why is that? Because we accumulated, we got our manipulation leg, we grabbed sell side liquidity, and now we're getting our expansion, or also known as distribution. Put our entry at the top of the equilibrium block. Look back to the left. What could potentially be the drawn liquidity? Notice how we have liquidity sitting at 16,413. Where's our stop loss? Stop loss at the bottom of the equilibrium block candle. And let's play this out. Here's a 4-to-1 risk to reward, or 4.1 risk to reward. Notice we're buyer stepping, right? And our PT has been hit. So you don't necessarily have to get in on the manipulation leg. I oftentimes do get in on the manipulation leg because I am trading the lower time frames very often, but you don't have to. You can easily wait for the confirmation. Why do we have confirmation and know this trade setup's going to work? We 100% know this is going to work out. Why do we know that? Well, one, we accumulated in this range here. We got our manipulation leg. We even swept internal sell side liquidity here. We got our break of market structure, full body close. We got our displacement over the relative equal highs. Now we're getting our pullback back to the equilibrium block. Look at the risk to reward. You're risking 44 points to end up making 182 points. That's worth it 100% of the time. And that is an example of accumulation, manipulation, distribution, also known as power of three. Now let's dive into another example. I know what you're thinking. Does the power of three work on common stocks or options? And the answer is yes, it does. We actually took a trade on AMD for over 400%. Funny thing is, it was an AMD setup. So let's dive into it. Notice here, what can we see? AMD is in this consolidation range. Not only that, but what do we do down here on this wick? Notice how we push down and get this little manipulation leg. And the following day, we actually end up gapping back into this range. So based on that alone, very, very likely this little push down here was our manipulation leg. It's not the biggest form of manipulation, but that's what was offered. Now, I knew this was a AMD setup. The reason behind it is the rest of the market was trending up. I'm talking about every tech name was just pushing higher and higher and higher. Now, AMD, on the other hand, decided to say, hey, we're going to consolidate for a week. Now, chances are, being a retail trader, you probably got shaken out, stopped out of a winning position. Now, once you incorporate AMD into your trade setups, you will be a lot more confident. Now, what can we see with AMD? Okay, well, we actually have higher time frame drawn liquidity that has yet to be swept. So, based on that alone, we are very likely going to get continuation up. We had buy side here, and my ultimate price target for this trade is actually 152. 152.42. We got on this trade on a Monday, and we rode this thing all the way till Friday. Now let's play this out a bit. I actually end up entering the following week open 5 minutes into the market. So we got our entry directly right here at 140.75. We ended up taking 142 calls just to keep it a little bit safer and not get eaten up by theta, because my plan was to hold this trade because we knew AMD would run. The reason behind it, it's an AMD setup. So let's play this out. Our first buy side liquidity was taken. Notice how we got the body closed through. So based on that, very likely we will see continuation up. As you will see, notice my PT was never hit. We did end up making over 400% on this trade, and the market ended up taking us out at 290%, but our PT was never hit. So what does that mean? The following week, very likely we can still look to target 152.42. We just need to find a good enough entry. Thank you all for watching. Please like, comment what you guys would like to learn next, and I'll see you guys in my next video.